So OCTAL operates in two main fields. We really focus on the provision of PET resin, which is predominantly for the bottling industry, and we also do PET sheet, which is where our patented technology comes into. We produce different types of PET sheet. We have a DPET, which is a direct from milk product, which is the market leader in terms of its quality, in terms of its clarity, in terms of its dexterous nature. We produce traditional APET sheet, and we also are focusing more and more on producing recycled PET sheet product. Our Salalah plant, which is our largest plant, provides all of these services. We also have a plant which is based in Cincinnati, which focuses solely on the recycled product. We have a small business in KSA, which also drives really supports the dairy industry in terms of the products that are required there in terms of yogurt pots, etc., and packaging for the poultry segment. Business has been strong and robust. We've been growing quite steadily over the last 4 years. Our CAGR has been running at 13%. Revenues in the year just past, 834 million. That's just up from a little over 750 the year before. And we're looking at an EBITDA last year reported at 75 million, up from 65 the year before. Obviously, we're securing a major level of expansion to allow us to develop to the next level of our business, and we are hopeful that revenues will be very close to $1 billion as we complete the current financial year, and EBITDA we're hoping will still show a significant growth, about 10 to 15%. OCTAL has entered into this new finance deal basically to take advantage of our market. Our sheet business is capacity constrained. There is more demand coming into the market than we can currently supply, and we've got an opportunity to ramp up our volumes quite dramatically, quite quickly. And therefore it was very critical for us that we brought in financing into the business that would allow us to expand the business to take advantage of that market. And that's from our existing customer organic base, but also to grow into new markets in Southeast Asia and in Latin America. The deal really is a mix. It's 225 million, which is an actual loan deal in terms which we're using to refinance some of our existing loans and tidy those up into one, and to drive forward with some additional capex funding. The remainder of the deal is to give us sufficient working capital to be able to run both our businesses, both our resin and our sheet business, in terms of the supply of raw material, and obviously to fund the working capital to support our customer base as well on the export side. Well, the focus on growth, because of the two different markets, it's in very different cycles. Our resin business is not so much growing volume, it's about controlling profitability and focusing just on profitable sales. So our area there is not about growth, it's very much about targeted sales of the business. On our sheet business, as I said earlier on, we simply have not got enough capacity to meet the market. We aren't even that massively globally our footprint is not that global at the moment, and therefore we've got a lot of opportunities. So the focus over the next 3 years, and really what this financing deal is for, is to drive the capacity growth. Some of the capex is used for efficiency gains so that we can process our raw materials more effectively and look for those internal cost benefits that have a fairly quick and rapid payback, and it will allow us to help drive profitability and obviously top line growth over the next 2 or 3 years. Our business is very much, obviously our largest single plant is based in Oman. So for us, the business is all about being in Oman. The Salalah port is fundamental to our existence. The existence of that port is why OCTAL was based where it was based. We import most of our raw materials at the moment, and that comes through the Salalah port. And we're actually a very, very large exporter. Oman for us is still not a very large market. Unfortunately, the population base is quite small, and our product is very much driven by population base. So we see any growth that we do in the business is obviously going to drive the level of exports that we do. We're based in Salalah. We try to make as much use of the SMEs in terms of provision of services to the business that's there. We will continue to grow our Omani headcount, which is a desire that we've got to continue growing the business on that basis. And we see that whatever we do is obviously linked in helping the manufacturing segment in Oman to become more positive. I think we can say that money is definitely out there. I think you have got to have a strong business case and have your business well identified and where its opportunities lie. But as we can see from the fact that this is actually quite a big deal and it was heavily oversubscribed, if you have the right product mix, there is financing available.